Hey traders, Raghee here. Welcome to Charts and Coffee. It's Fed Day, Federal Reserve today, 2 p.m. So lots to look at, lots to prepare for, lots that we could see opportunistically if we have some volatility. Usually Jerome Powell delivers it. So pretty stoked for the morning. Great to see you all. Good morning. Good morning. All right. So, well, let's just get into it. So, I mean, I don't know there needs to be much more said than the fact that when you take a look at the calendar, park there at 2 p.m. Eastern, FOMC economic projections, FOMC statement, federal funds rate, and then at 2:30 we have the FOMC press conference. Probably the most commonly asked question that I have around this Federal Reserve Day is when is sort of the coast clear? When is the impact? When is the dust settle? When are there opportunities maybe to fade in those markets? So we've been waiting for retracements or retests of levels. When is that opportunity going to present itself? And while you might get triggers inside that window, it's not until Powell shuts up are we going to see the dust start to settle. So keep that in mind. Have your watch list slash wish list ready. Wish list for me would be things like the dollar, getting along the dollar. That's something we've been talking about for a long time. It would also be shorting the euro, shorting the euro and looking at that opportunity. What else? I mean, those are a little bit outside what a lot of traders are looking at. I mean, I think the common things are, how can we get long Apple? How can we get long Microsoft? I'm looking to short crude oil. How can we buy the XLK? Is there an opportunity in Tesla and the XLY, maybe even Amazon? If you checked out yesterday's free video over at the Simpler Trading YouTube channel, you'll see sort of the ideas that I have going into today. Fly or flush, I think we're going to see volatility today. And then I am looking for the markets to continue higher as seasonally we would, with the emphasis being the last week of the year. Santa rally to some, window dressing to others, but I think that is still in the cards. All right. So as always, time for your questions is what our morning show is all about. Well, that and coffee. So let's kick it off there. Michael asks, good morning. Good morning. I'm looking to buy tea. Okay, let's jump on over to the chart, shall we? I'm looking to buy tea for a longer term hold for dividends. Is now a good time, or do you think it might sink lower? All right, let's start with the last part first. Michael, is it going to sink lower? Probably. Not until January would I expect that something as weak as this will suddenly find buyers and bargain hunters in December. Wrong month for that. However, longer term means longer term time frames. I don't like it there either. So there's no setup, Michael. Now you might say it's $22, Rog. It's inexpensive. Yeah, I could go to 21, 20, 19, 18. So let's just at least wait for some kind of bottoming pattern, or even something as small as a minor low or inside day or inside week, right? But, if you've got tolerance for this, it's not a trade. It's a short. The trade would be a short, but since it looks like you want to go long. Now, let me give you a Cliff Notes version on dividends. It's the same thing I would tell a Forex trader who wants to trade, say, back in the day, Aussie yen for the carry. That should be secondary. Dividends, the carry, whether it's a dividend king, aristocrat, that should be the cherry on top. There has to be an underlying reason you want to own the name, whether it be a Forex pair for the carry or whether it be a stock for the dividend. And I just don't let the dividend be the rationale. So I would have to say not yet, but maybe if you'd like, if we get down to 22.20 again, that would probably be an interesting retest of a recent low. But this is a downturn on both those time frames. So as long as we're probably not going to see, and that's not even for sure, we're probably not going to see the IYZ names, telecommunications, including T, gain any fans until sometime in Q1. If you've got the patience built in, which, Michael, it seems like you do, you should be, fine to sit through it. But I'm not a fan of sitting through. That's what you can weigh out there, in terms of what I see. All right. Next up, Tim. Good morning. What are the non-future ETFs I like for a potential pullback buy in the financial sector and post Powell? So, what are the non-futures ETFs that I like? The financial sector is the non-futures ETF. So, do I want to play XLF? So, Tim, do I want to play XLF on the daily? Yeah, I would love to. Let's get a retracement. Look, sometimes we get really too sophisticated with some tools and forget that looking at 38250 and 618, looking at the last major move, as I was taught by my mentor. Look, once you understand last major move, you can go anywhere from there. You can go to time projections, you can go to extensions. But I look at a last major move, and this isn't a great example of a clean last major move, but I think $38.50 is a pretty good place to build a position, even down to about 38.20 in this area between the half and 50% of the last major move. I'm bullish. I would be bullish XLF. But let's talk about structure. CME is fantastic. There are some individual stocks within the XLF that have my attention because unlike the XLF, which I am bullish, get down to that 50% retracement, we can look for movement higher from there. But I think ultimately what we want to do is think about structure. Let's prioritize those double greens. So I like that you're looking at XLF. I'm with you. Just remember, it's a bit of a laggard within the S&P. XLK, XLV look a little bit better, but XLF, that one joins the party. Look out. I think we're going to see the S&P rip. If those three cylinders, if you will, any Triumph motorcycle fans out there, one of the rare 3-cylinder engines, if all three of those cylinders can get going, we should see some good movement. All right, next up, how are you? Good morning. Which famous trader do I admire the most and why? Gosh, I'd have to, trader. There's so many that I would. I mean, all the ones I talk about, Dow, Darvis, Schabacher, got to throw Wyckoff in there, but Dow for sure. But I admire traders that have a point of view in the market and stick with that point of view with a prioritization on the fact that the game that we play is a psychological one. And I guess that's where I kind of gravitate to. More recently, I'm a huge Marty Schwartz fan, The Pitbull. It's probably one of my favorite memoir-esque type trading books, The Pitbull, Marty Schwartz from the first Market Wizards. Ed Seykota is a legend, philosopher trader. Do enjoy Ed's work a lot. Probably too many to even mention, but that's what comes to mind. I appreciate that. Look, when I started trading in the late 80s, we all stand on top the shoulder of giants, right? There's plenty of people that came before us. So I always take this advice. When there's a part of trading that you like, there's an aspect of trading you think, I really like this. Dive deep, look deeper, find out who sort of codified it, right? And then you'll find a lot of the traders that might end up being mentors for you, their books, their work, their trades. So, for me, always dig deep because I think a lot of times traders nowadays think they discovered the dark side of the moon, right? Saw it. In reality, there was probably someone who did it maybe better. And for me, I've loved sort of the history of trading. I love looking back to traders from 100 years ago, 60 years ago. That to me is very, very cool. All right. Thank you for that. Good morning. Google, finding support. Is either one a better trade than the other? Probably not. They ride shotgun. Google could be an interesting XLC anomaly. Now remember, Google are going to need the triple Qs and the NASDAQ futures to move higher because the XLC, the communications ETF, is absolutely a downtrend and probably will continue to test lows, maybe even head down to lower lows in a month where strong gets stronger, weak get weaker. That's what window dressing and tax loss selling is all about. So you really are looking at a bit of an anomaly within the XLC. But as long as that Darvis level holds, as long as that Darvis level holds, and we're in that neutral yellow JT multi, Ron, I'm fine with it. I'm all for it. If that's something you want to do in terms of anomalies within the XLC, that communication sector that's been just rocked as of late. All right, Jim asks, Tesla. I don't know. Is Elon done getting silly haircuts and selling stock? We do have a potential minor low. He's on the cover of Time, which I talked about the other day, is akin to being on the cover of Madden. If you're a football player, you don't want to be on the cover of Madden, and if you're a CEO, you don't want to be on the cover of Time. But that aside, I think we have some interesting levels. Potential gap close, minor low. Let's see if we can trade above the 966.5 level. If we can get through that, that would be a minor low bounce. And this is still chop. This is not a downtrend, right? See all the yellow, 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 yellow. I'm fine with a buy here. This is not an uptrend anymore, but the chop is influenced still mostly by the trend that was. So that's where, and this is, by the way, talking about traders that I respect and admire and who taught me so much. This is Charles Dow 101. Chop now, uptrend before, we still have a bullish bias, right? So thank you for the question. By the way, XLY, keep an eye on that one because I think Amazon's at some interesting levels for a bounce at 200, and that could give us a very nice XLY. Look at the XLY names. When I'm in the Sector Secrets Mastery room later on today, we're going to do a little bit of deep dive into XLY after we day trade some of the morning. But there are some interesting plays in the consumer discretionary. Amazon and Tesla being the top two stocks weighted within that high concentration ETF. All right, next up, Darren asks about IWM. Thoughts on the turn? Well, I guess there's a couple turns, right? A few. We have the turn here. That was, sort of a peaky turn. And then that reminds me, Trish keeps telling me I got to watch Peaky Blinders. I say Peaky and immediately start thinking about Peaky Blinders, which I hear is amazing. So one of these days, maybe I'll have to eye guzzle that over the holidays. But that was kind of peaky. Then we have the low here, right? Another turn, to your point. And then in the middle, not even quite the middle, we have another little turn here. So I think I'm expecting another little turn here. So this is chop. This is the flip the coin market. This is I have this cool coin somewhere here in the office. It's a Wall Street coin. It's actually currency, real currency from I forgot what country, but it has this neat sort of pit, bulls and bears on one side, and then I forgot what the denomination is. I don't think you'll find it. It's in a pile in the corner on my desk with a bunch of euro. But I'm a currency trader. I try to grab some coins wherever I go. But this is a flip a coin environment, my friend. And I think we're at the point where, once again, I'm looking for oversold. However, 8-13-21 now, for the first time in a really long time, have organized into red over red. Now, the first day of this is just the first day. I'll still look for a fade along this area. But if we get another day, we get 2 days in a row of red over red, this is actually starting to look like a potential downtrend if that happens. There's a lot of things that are in the way. 1, Darvis support. 2, this V score at just below a -1 standard deviation, which tends to be, as we can see previously, where we bounce. We've had just below a -1 standard deviation that accompanied this bounce. That's a volume determination, right? Darvis's price, this is volume, but right there again. So I don't want to give up and say, hey, it's time to short it, especially not at the bottom of the range. But this is going to be probably the last fade if we are to keep fade buy, to buy at the bottom there, if we are to keep the chop intact. All right, so next up, Let's see. David says, I heard Santa got a stimulus check and he's not showing up for work this year. Yeah, but we know that Mrs. Claus runs the show. So I think she's gonna boot him out of the house and send him to work. All right. Yeah. So Al, good morning. HSI. What are the dynamics in trading China? For now, stay away. Right? This is that scene in Poltergeist. Get out. Not yet. But Al, December's not the month for it. January could be. December is not the month where I want to think about bargain hunting in terms of what the larger forces, the larger volume, the movement is going to be. But early Q1, don't be surprised if all of a sudden a lot of the downtrodden sectors and stocks start to garner some fans. But right now, the main dynamic is it's in a down trend. And whether you're looking at the Hang Seng, whether you're looking at EWEB, 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 there we go. Whether you're looking at KWEB, these are those Chinese internet stocks. Whether you're looking at MCHI, the Chinese ETF, red after red after red on the structure. So the main dynamic for me is it's in a downtrend. Let's see if we can't get some bottoming patterns going and maybe even see the market go neutral, maybe. But December is not the time for me to think about, volume coming in and supporting um, downtrending stocks. Again, think PayPal, not the month for PayPal. Think Roku, not the month for Roku. IYZ, XLC, January, February. That's when, my December watch list is very different than my January, February one because the psychology at the beginning of a year is very different than the one at the end of the year. So I love that you all are thinking ahead, though. Where are the opportunities for the elevator to go up? Not where are places I can buy already parabolic or very strong stocks at high. So I love the quality of the names. I think just the timing is not quite there. Walmart, Mark, give me a Dramamine. Yeah, just give me a Dramamine. This one just very, very choppy. But I will tell you this, forget the 200, not in play. You've got this area of resistance here that is over bought. Thank you, Darvis. You've got this area of support there, oversold. Thank you, Darvis. And you have a neutral market. So this is overbought, oversold. Queue up a slow stochastic. Queue up a ready aim fire. And then here's the tough part. You got to wait for retracements. You got to wait for those retracements. So for example, if you wanted to play short, and I've kind of alluded to this already, I'm going to play short. You don't short this here. Right? Wait for a retracement. That's pretty much a 50% right in there. Okay, there's short. If you're looking for a buy, and you did not get the extreme, because by the way, that's the low that mapped to that right there. That wasn't just guessing at, that was a double bottom. That's a range bound market. Okay, market starts to bounce. Don't chase it. Wait for a retracement. If you didn't get that, well, wait for a retracement, right? 50%, 318, 618, somewhere in that vicinity. And then that could be the buy, right? So this is where if you are proficient with some very elementary Fibonacci retracement understanding, which that's about all that I use, just basic retracements. Those of you that took my day trading class, what's a breach retreat. That box that's built into that clearing range tool that I give you all, it's good old-fashioned Fibbo. Fibonacci is not a trading tool. It's far bigger than that. It is a mathematical law of nature. And for us, it's measuring the nature of the way that we react to this thing called the stock market, right? Okay. Thoughts on INTU? I mean, I like the trend. I think I'd like to see a minor low or an inside day. Shaniqua, I think that there's definitely a double green buy. Good eye. Good eye. Jim asked, do I re-anchor my V score at the same time that I re-anchor the VWAP? My V score is anchored to the first of the year on the daily. And then I've got 3 different VWAPs. So it depends on the month and the week and the day. But the first of the year anchored VWAP, yeah, we'll re-anchor it sometime mid-Jan. Yeah, we'll re-anchor the V score and we'll re-anchor the VWAP, the first of the year VWAP, sometime, a few trading days into January. All right. Okay. Are my ETF and day trading strategies two different mastery subscriptions? PSW, not at all. No. So PSW, the mastery is the Raghee Clubhouse. So whatever type of trading strategy that I use, with the emphasis mostly on options on ETFs and stocks, but in the mornings, especially Monday, Wednesday, Friday, when we have zero dated options in the Qs and in the SPY, um, we'll look at gold, crude, we'll look at bonds, anything that has an ETF alternative, we can day trade those options. And even some of the traders in the mastery trade futures, minis and micros. So no, it's in the morning, I focus on the day trading until about 11:30, and then in the afternoon I focus on the end of day. So if you've taken my day trading class and you've taken any of the ETF mastery classes, it's really a reflection of what I do and who I am as a trader throughout the day. So no, it's not too different. It's not too different. Come check it out. You'll see how we structure it, how we divvy it up. And it's a really active room. We have the room open so the members talk to one another, scan for ideas together. So come check it out. I think you'll really, really like it. All right. That being said, I've got to head on over there. So I'll see you all tomorrow, same time, same station. Be good to each other. Fed at 2 p.m. All right. I'll talk with you tomorrow.